Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on Marathon Petroleum Corporation, a leading U.S. refiner and marketer of petroleum products. Marathon Petroleum operates the nation's largest refining system as well as a network of retail outlets under the Speedway brand. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
Marathon Petroleum has been a dominant force in the oil refining and marketing industry for years. From a behavioral finance perspective, how do biases like the status quo bias and overconfidence influence their decision-making, especially in areas like refining operations and market expansion?
The status quo bias is particularly relevant to Marathon Petroleum's approach, especially in how they manage their refining operations and retail network. The status quo bias refers to the preference for maintaining existing conditions rather than making changes. Marathon Petroleum leverages this bias by focusing on optimizing and maintaining their extensive refining infrastructure, which has been the backbone of their business. This approach ensures stability and reliability, which is crucial in an industry where disruptions can have significant financial impacts. Overconfidence also plays a significant role, particularly in how Marathon Petroleum approaches market expansion and investment decisions. Overconfidence refers to the tendency for people to overestimate their abilities or the success of their strategies. Given Marathon Petroleum's long history of successful operations and market presence, the company's leadership might exhibit strong confidence in their ability to continue dominating the refining sector and expanding their retail network. This overconfidence can drive Marathon Petroleum to invest heavily in refining capacity and market. Overestimates market demand or underestimates the challenges associated with regulatory changes and environmental concerns.
And this focus on leveraging the status quo bias and overconfidence has helped Marathon Petroleum maintain its leadership position in the refining industry, appealing to both customers and investors who value stability and growth potential.
Exactly. Marathon Petroleum's strategic use of the status quo bias in maintaining their refining operations and overconfidence in pursuing market expansion appeals to investors looking for a company that balances operational excellence with growth opportunities. However, this approach also means that Marathon Petroleum must carefully manage the risks associated with market volatility, regulatory changes, and the growing demand for cleaner energy alternatives, particularly as the energy landscape continues to evolve with new challenges and opportunities.
Let's talk about diversity, equity, and inclusion at Marathon Petroleum. As a major player in the energy industry, DEI is particularly important for Marathon Petroleum. How does this intersect with behavioral finance?
Marathon Petroleum's approach to DEI is crucial, especially as the company operates in a global and highly regulated industry where inclusivity can drive better decision-making, operational efficiency, and innovation. From a behavioral finance perspective, strong DEI initiatives can enhance Marathon Petroleum's ability to innovate and adapt by fostering a culture that values diversity and inclusion. A commitment to DEI allows Marathon Petroleum to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in the energy industry. For investors, the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help Marathon Petroleum build stronger relationships with employees, communities, and regulators, reinforcing its brand as one that values inclusivity and ethical leadership.
Investors are increasingly considering DEI when evaluating companies, especially in industries like energy, where the ability to foster inclusivity and operational efficiency is critical to long-term success.
That's right. By embedding DEI into their corporate culture and operational strategies, Marathon Petroleum not only improves its ability to serve a broad range of stakeholders but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to market adaptation, Marathon Petroleum operates in a highly competitive and environmentally focused industry. How does the company adapt to changing energy demands and regulatory requirements, and what role does behavioral finance play in this?
Marathon Petroleum's strategy involves continuously adapting its refining operations, retail network, and environmental practices to meet the evolving demands of the energy market while maintaining its focus on efficiency and regulatory compliance. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with market volatility, regulatory changes, and environmental concerns. Marathon Petroleum's ability to understand and respond to new energy trends such as the increasing demand for cleaner fuels, the shift towards renewable energy, and the integration of digital technologies allows it to stay relevant and competitive. By using data analytics, environmental impact assessments, and market research, Marathon Petroleum can identify emerging opportunities and adjust its strategies accordingly, helping to mitigate risks and capitalize on new opportunities in the energy market.
And this adaptability is essential for Marathon Petroleum, especially as they face competition from other energy companies and the growing demand for more sustainable and environmentally friendly energy solutions. Their ability to maintain their brand's relevance and leadership in a changing industry is key to their continued success.
Exactly. Marathon Petroleum's focus on understanding energy market dynamics and adapting its strategies accordingly allows them to remain a dominant player in the refining and marketing industry while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in energy policies, technological advancements, and environmental regulations.
Now, let's compare Marathon Petroleum to other companies in the energy and refining sectors like ExxonMobil, Chevron, and Phillips 66. How do the behavioral finance dynamics differ?
Marathon Petroleum's dynamics are often compared to other energy giants like ExxonMobil, Chevron, and Phillips 66, particularly in their approach to refining, marketing, and competition. Marathon Petroleum's strength lies in its focus on refining and retail operations, appealing to investors looking for a company that balances operational excellence with market expansion. ExxonMobil, with its emphasis on global energy production and integrated operations, appeals to investors interested in a company that prioritizes market dominance and broad energy solutions. Chevron, known for its leadership. Its leadership in both upstream and downstream operations attracts those looking for a company that is driving advancements in energy technology and sustainability. Phillips 66, with its focus on refining, chemicals, and midstream operations, appeals to investors interested in companies that integrate energy production with refining and transportation. Marathon Petroleum's behavioral finance dynamics are shaped by its reputation for efficiency, strong market presence, and adaptability, making it an attractive option for those seeking stability and growth in the energy industry.
And unlike Chevron, which focuses heavily on both upstream and downstream operations, Marathon Petroleum's strength lies in its specialization in refining and retail, appealing to a different type of investor and market.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For Marathon Petroleum, the focus on refining excellence, market expansion, and environmental adaptability provides a unique value proposition in the energy industry.
To sum up, Marathon Petroleum's approach to business is deeply influenced by behavioral finance principles, whether it's through their refining strategies, adaptation to changing energy demands, or their approach to DDI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives Marathon Petroleum's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.